What's going on, Z community? It's me, Tamer Azizz, and today we're going to be comparing hard credit checks and soft credit checks. Now, the reason that I decided to make this video is because I used to work at a cell phone or internet service provider, and every single time that I had to mention hard credit checks, it was as if somebody was behind me saying, don't do it. We were always supposed to tell clients beforehand, but it's as soon as I mentioned this, they just wanted to pull out of the deal. So once I asked them, I'm like, why do you not want to do this anymore? They would always end up telling me, oh, I don't want to damage my credit score. So hopefully, if you are one of my clients, you're watching this, and if you're not, you're a Z community member, so I really respect that. So a soft credit check is actually a quick little scan of what your credit file has. It will not affect your credit score whatsoever. A soft credit check usually happens whenever places that give out loans will pre-approve you for a certain product, or whenever you're just checking your credit score online. Now, don't get it mixed up. If you find that you're pre-approved for a certain card or line of credit, whatever the case may be, and you decide to accept that, it's gonna do a hard credit check. Now, a hard credit check, on the other hand, is actually a thorough in-deal search of your entire credit file. They're gonna be looking at, when did you open this credit card? What's your credit age history? They're gonna look at all of the factors that we've discussed in the past. Think of a soft credit check as someone just briefly going through your LinkedIn profile, and a hard credit check as someone actually doing your background check, your interview process, and all of that fun stuff. I don't really know if that's a good analogy, but if you can think of something else, let me know in the comment section down below. Now, lenders do these little credit checks so that they can just see how your borrowing habits look like. Because at the end of the day, if they're gonna give you money, they're gonna have to expect to get that payment back in full. Think about it like this. Would you personally lend your money to somebody who's had a bad reputation of paying people back? Or would you lend that money to someone who has a good reputation of paying others on time? If at all. Z community, sorry to interrupt you once again. I wanted to let you guys know that we're about to launch our first ever podcast. Let me introduce you to the podcast. It's called the PFC Show, or what you might call it, the Personal Finance in Canada Show. In this podcast, we're going to be talking about anything from credit all the way to investing. And after each and every single minute of these episodes, I will make sure that you are 1% closer to your financial goals. Now, the podcast is set to launch on April the 1st, but to celebrate this, I'm going to be doing a $50 Amazon gift card giveaway. If you want to know more details, be sure that you're clicking that Instagram handle and make sure that you're entering as many times as possible. Anyways, good luck and enjoy the rest of the video. So an easy way to differentiate between a hard credit check and a soft credit check is that businesses will actually ask you if they can do a check beforehand. If they don't, and if they tell you it's just a soft credit check, but then you look at your credit score the next week and it's there, they lied to you, chief. They lied to you. Now, the reason you need to care about this is because hard credit checks are actually put into your credit score. This is what we were talking about, the new credit factor, which makes up 10% of your entire credit score. Remember how we said in past videos that 0 recent credit applications is excellent, but 1 to 2 is in good standing? If you need a quick refresher, be sure to check out our entire credit playlist, which talks about the different factors. But anyways, let's talk about the different situations where a hard credit check will happen and when a soft credit check will happen. Now, you will never, ever get a credit check at all if you zap that subscribe button, zing that like button, and gently tap that notifications bell. In the situation where you have to get a soft credit check, these will usually happen when you check your credit score, getting pre-approved for certain loans, employer background checks, believe it or not, and sometimes when you're trying to get an insurance policy. Hard credit checks can happen whenever you are trying to apply for a new loan, getting a new phone or even an internet plan, asking for a credit limit increase, or financing and leasing a car. And even just recently in Canada, your rent can also be used for a hard credit check. Now, remember that these situations do vary, so don't feel shy to ask if you're going to be getting a hard or a soft credit check. And now, how many points do each of these credit checks take off? Now, for the soft credit check, they don't take off any points whatsoever. But for the hard credit checks, it takes off anywhere from 5 to 20 points. Even then, the situation depends on what your entire credit file is looking like. For example, if it's been around 6 to 12 months or even a couple of years since you've last had a hard credit check, you should be fine. But if you're just going all over the place asking for new credit cards or asking for new lines of credit, then it's going to hit your credit score much more. Now, if you still need some clarification with the difference between these two types of credit checks, let me know in the comment section down below and I would love to get back to you guys. Question of the week is, when was the last time that you did a hard credit check? Let us know in the comment section down below. I can't wait to hear from you guys. Anyways, ZCommunity, this is me, Azizz, signing out. Peace.